AvranceCorp Development's YouTube channel, Quality Homes for All.
Welcome in to this edition of AvranceCorp Presents. I'm Kenai Andrews. I hope everyone's doing well out there. It's a bit of a snow day here in the Greater Toronto area. According to the weather reports, we're going to get somewhere between 5 and 15 centimeters of snow, depending on how close you are to the lake. Where I am, looks like we're getting a lot of sleet as well currently. So hope everyone is safe and healthy out there. We did have a guest for today, but unfortunately, due to the inclement weather, we'll have to postpone that particular appearance for another show. However, I did want to briefly read a quick press release from the Bank of Canada, who announced who really announced the Bank of Canada overnight rate. So I briefly wanted to read the press release to get their, so that you could hear their comments and thoughts on their decision for the rate. All right. So basically what the Bank of Canada did was they kept their current rate of 2.25% unchanged. So they did not alter the rate. This is as of today, December the 10th. And in their comments, what they said was, the Bank of Canada today held its target for the overnight rate at 2.25%, with the bank rate at 2.5% and the deposit rate at 2.2%. Major economies around the world continue to show resilience to U.S. trade protectionism, but uncertainty is still high. In the United States, economic growth is being supported by strong consumption and a surge in AI investment. The U.S. government shutdown caused volatility in quarterly growth and delayed the release of some key economic data. Tariffs are causing some upward pressure on U.S. inflation. In the European area, economic growth has been stronger than expected, with the services sector showing particular resilience. In China, soft domestic demand, including more weakness in the housing market, is weighing on growth. Global financial conditions, oil prices, and the Canadian dollar are all roughly unchanged since the bank's October monetary policy report. Canada's economy grew by a surprisingly strong 2.6% in the third quarter, even as final domestic demand was flat. The increase in gross domestic product largely reflected volatility in trade. The bank expects final domestic demand will grow in the fourth quarter, but with anticipated decline in net exports. GDP will likely be weak, and growth is forecast to pick up in 2026, although uncertainty remains high and large swings in trade may continue to cause quarterly volatility. Canada's labor market is showing some signs of improvement. Employment has shown solid gains in the past 3 months, and the unemployment rate declined to 6.5% in November. Nevertheless, job markets in trade-sensitive sectors remain weak, and economy-wide hiring intentions continue to be subdued. CPI inflation slowed to 2.2% in October as gasoline prices fell and food prices rose more slowly. CPI inflation has been close to the 2% target for more than a year, while measures of core inflation remain in the range of 2.5% to 3%. The bank assesses that underlying inflation is still around 2.5%. In the near term, holiday on the prices of some goods and services. In the near term, CPI inflation is likely to be higher due to the effects of last year's GST, HST holiday on prices of some goods and services. Looking through this choppiness, the bank expects ongoing economic slack to roughly offset cost pressures associated with the reconfiguration of trade, keeping CPI inflation close to the 2% target. If inflation and economic activity evolve broadly in line with the October projection, the Governing Council sees the current policy rate at about the right level to keep inflation close to 2% while helping the economy through this period of structural adjustment. Uncertainty remains elevated. If the outlook changes, we are prepared to respond. The bank is focused on ensuring that Canadians continue to have confidence in price stability through this period of global upheaval. All right, so that's the press release notes from the Bank of Canada, again confirming that the current overnight rate of 2.25% remains unchanged. And in their notes, they noted that from what they are seeing, their current decisions are helping to keep the inflation rate around 2%. That is what they are trying to do, and of course, they are always prepared to respond should that inflation rate increase at a quick rate. So again, looking at their notes, it looks like we're probably going to stay around this 2.25% amount for a while unless something changes drastically. But there we are. Now, I think what would be great, especially considering the comments here from the Bank of Canada, what I'm going to do is basically replay some comments and thoughts from our previous guest, mortgage agent, level 2 mortgage agent at the Sherwood Mortgage Group, Joe Ferraro, as he had some thoughts on mortgage rates that I think are relevant to the Bank of Canada's comments here. So here we go. I'm going to play Joe's conversation with us here last week on AvranceCorp Presents. Check it out.
Welcome in to AvranceCorp Presents. I'm Kenai Andrews. My guest this week is a self-made man who is known for his broadcasting career on Rogers Sportsnet, where he hosted flagship programs such as MMA Connected, which later turned into UFC Connected. He then successfully transitioned over into the world of real estate, where he is currently a mortgage agent level 2 at the Sherwood Mortgage Group. So here with me today is none other than Showdown Joe Ferraro. Showdown Joe, thank you so much for coming on this edition of AvranceCorp Presents. I hope you're well as we see this year is coming to an end.
Thanks for having me on. I haven't seen you in a while. It's a pleasure seeing your face. You're bringing up some memories from MMA Connected, UFC Connected, and UFC Central. That was the final show, but big transition from that chapter of my life, or I guess you could say my past life, to where I am today. So good times.
Absolutely. And, I obviously have to ask you because, at that point, you were at the top of the food chain there in terms of programming there. Like, that was a huge show. Everyone was watching those shows. And I was just curious, like, when did the idea of transitioning to something else pop into your mind? Was it always there, or did a key moment happen?
Yeah, I mean, at that time, it was a premier show. It was absolutely, beloved by the network. It was loved by the UFC, because remember, it was called MMA Connected at the time, and after a few episodes, it was the UFC that contacted Sportsnet to say, hey, we want to put those 3 letters on there. We want to put the UFC letter on the show, change it from MMA Connected to UFC Connected, which eventually, when there was a bunch of rebrands at Sportsnet, with Sportsnet Central, the new show, the radio station, they said, we're going to switch it over to UFC Central. We were the first show on the planet at the time to be allowed to have those 3 letters UFC as part of a broadcast. It wasn't until later on that, UFC on Fox and UFC on ESPN and all that stuff took place afterwards. So everything was fantastic back in the day. It was a wonderful ride, but then the broadcasting rights for the UFC went from Sportsnet to TSN, and it was a natural reaction by everybody saying, well, Showdown Joe is going to go to TSN now. He's going to follow the UFC brand. I believed it. I firmly believed it. I thought I had set a great foundation and a great example for myself and for the sport itself. That I was the premier guy or analyst, anchor, host that could take the product to the next level. Unfortunately, at the time, the executives at the other network didn't see it that way. I heard story upon story upon story upon story as to why they weren't going to bring me over. Nothing to do with my reputation. It was political. It was business related, and it didn't make sense because they had hired previous talent from Sportsnet. So I tried and tried and tried and tried again to see what we could do, but the door kept getting slammed in my face, and I couldn't figure out why. We had thought about doing some stuff over in California with Fox, ESPN. There were tons of discussions that went down. But while all of that was going down, all the money that I had saved, I wasn't generating income. There was no income coming in. So all that money, picture bank account, it's this big. And as time went on, your savings. I'm living off of my savings, and I
Right.
young family. I had my son to support, had bills to pay with my wife at the time, and I'm like we have stuff to do here. And then I realized this isn't going to work. I ended up getting some other gigs in the MMA world, but it was, if I remember correctly, it was a 93 or 97% pay cut.
Wow.
Like it was literally like almost peanuts. It was just like I can't survive on this. Nobody can survive on this. This is literally a part-time job now.
Right.
From six figures to barely anything at the end of the month. I got to figure this out. So it was brought to my attention that, hey, you know what? Why don't you try getting into the mortgage broker space? You're good with money. You understand math very well. You're gregarious. You're good with people. You've got the personality to get out there. You're a great seller. You provide value. Why don't you think about this? So I researched it a bit, took a look, and said to myself, I could probably do this. I don't see why not. I got my mortgage license. Unfortunately, started with a brokerage that didn't work out. I wasn't ready to really take off my mortgage career, but neither was the party that I was working with. Understanding who I was, transitioning, had these lofty expectations for me. I said, I don't work that way. You got to bear with me. I'll get there. And then was strangely and ceremoniously released to my comedic laughter. To my laughter, I said, okay, and that's not going to end well for you. And ended up signing up with another brokerage. Had a wonderful time there. Hit a ceiling, and then moved over to Sherwood Mortgage Group, where the sky is the limit. There's absolutely no ceiling on our income. We can do whatever we want, however we want, as long as we're servicing our clients. And then from there, I became an award-winning mortgage agent in multiple different categories every year. So no complaints there.
That is amazing. So then tell us exactly, or tell us more about your role there at Sherwood. I understand you're a level 2 mortgage agent, and you primarily, secure mortgage financing for a lot of first-time home buyers and stuff, but I'm sure there's a lot more involved.
Yeah. So as a mortgage level 2 agent, so you've got basically 3 different categories when it comes to mortgage agents. You've got your level 1, level 2, and your broker. Level 1 is in essence similar to level 2, but at level 2, you can sell private mortgages. You can, facilitate private mortgage transactions. And then on the broker side, when you become an actual broker, a certified licensed broker, there's a lot more administration and auditing and stuff like that involved, right? So it's a little bit different than being a level 2. I was going to get my broker license until I was told you don't need it. You're a great leader. You can be a team lead. You can have agents under you while doing your business. So that's the path that I chose. I didn't want to get my broker's license. When I saw what it entails, it's not for me. And then there's really smart and good people that have that license. It's not for me because of the paperwork. I don't have the time, Kenai, to do all that stuff. But I do have time to help clients. And in essence, what my main focus, it's kind of varied. I am thinking about doing a couple of niches in 2026. We'll see what that's going to be. But first-time home buyers, clients that have existing mortgages that are looking at renewing or refinancing. In the very worst case scenario, trying to save somebody's house, right, where there's private lending involved, right? A lot of deals for self-employed clients, because self-employed clients may not fit under the prime side, where you want to get to your big six bank or one of the monoline lenders. They may not show income, but they may have a business that generates hundreds of thousands, if not millions of dollars. But when it comes to tax time, they're showing, $45,000 in income. You're not getting a mortgage with $45,000 in income. So let's take a look at your 12 months bank statements, and oh, well, there you go. You're generating $950,000 a year in revenue. What are your expenses? Oh, they're $200,000. Well, this is a different story. I can look at that 750,000 and change and be like, I can talk to a bank and say, here's what's left over. We can use some of this as income. How much do you need? And we go through all the legal paperwork to make sure that it fits all the regulations. And then I get deals for self-employed clients, right? But yeah, first-time home buyers, they're generally my favorite, because you get to educate people, first-time home buying, down payment, what's required, and then eventually they may want to buy a second home, a cottage. They may want to rent the existing one they have at the end of their term and move into another one. So we build equity, and you hopefully build portfolios and finances for clients that have a legacy. And by the time they reach my age, they're doing pretty good for themselves.
Boardwalk empire, if you
Okay.
might say.
Yeah.
Very interesting. Okay, and for the record, Sherwood was founded in 2008. It's a Canadian company.
I believe so, by Anthony Contento. At the time, Athena Constantino. I know Eric was part of the group, but Anthony's the principal broker now. And they started small. It was Anthony, and he decided to leave the bank that he was working at. He brought some of the agents over. He just wanted them to trust him, and he did a wonderful job. And it's now, oh my God, 180 agents across the country he's got now. Right? Like, we've got agents in almost every single province. We're licensed in almost every single province. Like, if a client reached out to me and said, hey, I live in Alberta, can you do my mortgage out here? Absolutely. I may not be licensed there. I'm licensed in Ontario, but we have enough parties over there, and we have what's called a small or an SMU unit, which basically assists us that have the license out there, and we can do the mortgages out there. So BC, Alberta, I think we're closing something in Quebec. We have a bunch of stuff out on the East Coast. So yeah, good times. Good. It's an amazing brokerage to be a part of. I'm never leaving this brokerage. I cannot see me leaving this brokerage. It's and when you have that kind of high quality content agents, it gives us leverage with the banks. Whereas if they're offering a 4.09 as their rate for an insured mortgage, we might get it at 3.99 or 3.89, right? So there's different ways that the relationship being a part of Sherwood has, and just the camaraderie, the family environment. I can call the top level agent at any time, either, it doesn't matter, he or she, and I can say, listen, I've got a deal here that something is off or something doesn't make sense. And they're like, yeah, do this, do that, check with this lender, check with the insurer, bank, deal is done. Right. So you can reach out to anybody at any time in Sherwood, and your deal is always going to get done. You'll always be able to help out any type of client.
All right. Well, at least I can scratch off the rumor of George St. Pierre nodding you towards real estate there. I've got that off my bingo card.
Be careful with George. He has a habit of convincing anybody to do anything when it comes to business. He's a very smart guy, as genuine as they come.
Exactly. Shout out to George St. Pierre. All right. Well, recently we had on another luminary in the combat sports world here in Canada. We had the industry partnership and community manager over at the Grand Valley Construction Association, Mandy Bajol, and she graciously shared with us some of the thoughts and observations from her members, boots on the ground there in the skilled trades section there. I just wanted to play you a few comments that she had on the show. Here we go. It's a few comments from Mandy Bajol. They say that boxing is a euphemism for the game of life, And our guest here today at AvranceCorp Presents has definitely lived that life. We've watched her transition from oh my goodness, is it 11-time national flyweight champion here in Canada over to the Olympic stage where we saw her compete in the Rio and Tokyo Games. And now she's transitioned over to the construction industry as the Industry and Community Partnerships Manager over at the Grand Valley Construction Association. Here with me today is Mandy Bujold. Mandy, thank you so much for coming on today. How are you doing?
I'm doing great. Thanks for having me. Right now, people are just nervous. People are trying to figure out, what does this mean for me? People are downsizing. We're seeing a lot of layoffs. But again, it's going to bounce back. It's just a matter of time. So a lot of what we can do right now is, how are we preparing people for what's coming next, right? I think when the lights do turn back on, everyone's going to be looking for workers. Everyone's going to be looking for those skilled trades, and we don't have a lot of them coming through the pipeline from the educational side of things. So we're trying to also focus on those pieces, to how are we prepared using this time to think about what the future is going to look like.
All right, that was Mandy Bujold basically saying that there's a lot of uncertainty that her members are experiencing there, and her members using the time to upgrade their skills and basically prepare themselves for, anticipation of a more active 2026. What are you seeing from your boots on the ground in the mortgage sector there?
Oh, she's bang on. She's absolutely correct. There is uncertainty on so many different levels, especially what's happening with south of the border, how that economy is working, who's in charge over there, the uncertainty with the tariffs and whatnot. It's affected everyone and everybody. As much as we're trying to say no, 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 it's there. It's there. Sentiment in the market has always remained. The Bank of Canada, who's notorious for keeping us safe, keeping us in line, they do a good job, no matter how much we can try and say we don't like them, right? Between, if I'm not mistaken, Bank of Canada, New Zealand, and Australia, they've always nailed it, right? They've always nailed it. So we're as much as we're not happy with the current rates right now, what's happening south of the border and the uncertainty that's happening up here, whether it's inflation, whether it's unemployment, it all has an effect in the mortgage world and how those rates look. Because if inflation is high, the rates are probably going to be high. If unemployment is low or high, it affects the rates. It all depends. When we get inflation down, which we have, once inflation gets down, the rates start dropping. And there was the old adage, when it's low rates, it's high house prices. When it's high rates, it's lower house prices. It's a different world for buyers and sellers. This is, I think, one of the few times in history where we're not seeing that. We're not seeing that. We're still relatively, quote unquote, high rates. They're not high rates. Just people were so used to the pandemic rates in the 1.3s and 1.4s that there was a big, huge sticker shock with everybody renewing now in 2025 and 2026 in the 3s and 4s. But if you look at the average over the past 25, 30 years, we're okay. We're actually okay. People got too accustomed to that 1.4, 1.3, 1.69 variable. They just got very comfortable with that after 5 years, the world changed, the landscape changed. So there is uncertainty. In 2026, from the economists that we've spoken to, we just came back from an exceptional annual event in Niagara with Sherwood Mortgage Group, where all the agents fly in from across the country. We have an award show. We always have an economist or two, as well as some very high-end presidents and VPs and directors from banks that come in and discuss the current market and what they're seeing for 2026. And I can tell you this, never have they been wrong. For those that have come to Sherwood, every economist that we've had has pretty much nailed it, pretty much nailed the prediction. So what we're looking at 2026 is similar, or early 2026 to mid 2026 is similar to what we're seeing right now. They're anticipating a tempered spring market, right? I want to be the one that says the spring market's going to be awesome. But I don't know, right? We just don't know. A tempered spring market, because there's going to be so many renewals coming up and the renewal shock. So remember, people in 2026 are renewing 5-year mortgages from 2021, pandemic
Right.
time,
Right.
right? So people that were at that 1.4 or 1.3 are going to be renewing at current market rates, which are sitting in the low to mid fours.
Mhm.
So whatever amount of money that they put towards that mortgage, you better hope it wasn't just interest only, or principal was paid down, because that balance now after 5 years is now going to be paid at a much higher amount, whether it's monthly, biweekly, whatever payment terms they have. So yeah, 2026 is going to be an interesting year. And then for the real estate market, we'll see what's going to happen with the Bank of Canada, with if there's any more cuts, if they're stabilizing, if they're keeping it as is. I don't think they're going to raise it, but don't ever let anyone tell you, to anyone watching this, don't let anyone ever tell you that they know mortgage rates and that they know the pattern and stuff like that. It's hundreds of people I have spoken to, far more experienced than me, that have all been wrong. Okay. Nobody can predict it. We go, no one could have predicted the pandemic. And
Right.
everyone thought when the pandemic happened, oh no, mortgage rates are going to go through the roof. It went the opposite way. They plummeted. They absolutely plummeted. And then the Bank of Canada flat out said, we have no reason to raise rates. Rates will remain low until further notice. And in the blink of an eye, they skyrocketed up. Right? So I don't buy what a lot of people say. Just it's situational, day by day, month by month, quarter by quarter. We go with what we have. So in 2026, all signs are pointing to a tempered spring market, and then hopefully a pickup in the summer and fall. So we're all going to cross our fingers. Everybody wants volume. Everybody wants to be busy. Everybody wants to see a stable market. But again, let me wrap up with what I started with. What's happening south of the border is a problem. It's a
Right.
problem. So it impacts us a lot. So
Right. I think, as you mentioned, a lot of eyes are looking to see how that gets resolved. A lot of eyes on the prime minister and the government to see how this thing rolls out. Kind of like a, Brock Lesnar versus Shane Carwin here.
right, yeah.
UFC 116 or whatever it was. Now, but what do you say to the clients? Because sooner or later they're going to come knocking, and they're going to be interested in buying. Somebody's going to be interested. How do you calm them down? How do you reassure them? How do you position them properly for what you feel is coming ahead?
It's all about the education. It's all about the put yourself in their shoes, right? What would you want someone to tell you? And don't be a yes man, right? Like don't give them answers that are going to make them feel overly confident or overly comfortable. Give them the truth. Tell them the truth. This is the market that we're in right now. This is what's potentially on the horizon. If we're going to do a mortgage right now and you're closing within 90 days, and every client's different. Like every client profile is different. And sometimes I'll get a young couple, and they'll like, we want to buy condo, and we're going to sign up for 5 years. We want a 5-year mortgage term because that's the lowest rate. And the first thing I asked them, I don't know if it's offensive nowadays, but I asked them flat out, getting married? Yep. Okay. Moving in together? Yep. Plan on having kids? Absolutely. All right. You want to be in a condo with a child? Not sure if anyone ever told you, but when you have a child, that's another human being in the household or the condo that has their own furniture, that has their own clothes, that has their own boxes and boxes and boxes of diapers and formula. That condo is going to get really, really tight. So do you really want to do a 5-year deal? Let's take a look at the 3-year deal and if it's affordable. If it's affordable and you still have a bit of cash flow at the end of the month, well, hopefully a lot of cash flow, but if you have cash flow at the end of the month, you're in a good place, right? Everybody wants a perfect life. They're sitting there on the beaches in a beach hut in Bora Bora. Well, we all want that. But the reality is we live in Canada. We live in Canada, so we have to take things one step at a time. Make sure that you're employed. Make sure you've got money coming in. Your mortgage is affordable. Your family is taken care of. There's food on the table. So my job is to take a look at those finances and say, okay, young couple, or could be a first-time home buyer. A guy wants to leave his parents' house and he's saved up $170,000. He wants to buy a home. He saved up $25,000. He needs a gift letter or a gift from the grandparents or the parents. There's always ways of figuring it out. And then we take a look. Do we need a cosigner? Can we get a guarantor? Right? At its core, I want people to be comfortable when they make these decisions, because there's nothing that makes me happier than seeing keys being put into someone's hand. Right? Here you go. You're a first-time homeowner. Perfect. Let's go. Let's get you into this place here. I'll take care of your finances. You take care of the moving and unpacking. Right? So it's you want to make sure people are comfortable. And then I do my follow-ups, within 30 days after, or the journey up until the mortgage, I'm with them along the way, right up until they get the keys. Then I follow up in 30 days, and I follow up in 60 days. I follow up in 90 days, 6 months, 1 year, and then we do on the anniversary, right? And then right before they're about to renew, I contact them out 90 days out, say, hey, your mortgage is renewing. You're 90 days out. Let's not wait till the last week. Let's see what your bank is offering now. And you need to reach out to the bank. Because if you think the bank is going to reach out to you, even though they legally have to, they won't, right? Or they will, but on their terms.
Right.
Okay, so let's take a look at what they're offering. And then we get into the whole renewal process, right? Did you accumulate debt throughout the term? Well, I got $75,000 in debt. I made a bunch of changes to the home and put new windows in, finished the basement. Perfect. We can take that 19.99% credit card debt, or that 12%, 9% unsecured line of credit debt, put it into your mortgage, and now instead of that 19.99%, you're paying 4% or 3% on all that, right? So I'll save you money there. I'll save you $600 to $700 a month as an example right there, right? So along that journey, it's not a one-time deal for me. It's a client for life for me.
Right.
All right. So that was some highlights from our conversation with Joe Ferraro, level 2 mortgage agent there at Sherwood Mortgage Group. Again, some interesting comments, again, considering the Bank of Canada's decision to hold the overnight rate at 2.25%. As you heard in the conversation, Joe does not like to predict the future in terms of rates. But I did see a lot of people on YouTube and so on kind of hinting that the rate would remain unchanged. So I guess all of the drama is now gone, and people can, I don't know if people are celebrating or anything like that. I haven't heard any big Bank of Canada mortgage parties happening now because of this decision, but I think people are moving on and proceeding accordingly with what we saw. All right. Well, that will do it for this edition of AvranceCorp Presents. I'm Kenai Andrews. If you're out there on the roads, please take care out there. Make extra time for yourself and get you home safely and healthy for the next episode. We do this every Wednesday at 2 p.m. Eastern Standard Time. So for AvranceCorp Presents, I'm Kenai. We'll see you back here next Wednesday. Take care. They say that boxing is a euphemism